I don't see a revision yet, where core is up 0.2, which means it's the third up 0.2 since the highs going back to 1981 were established up 0.8. That was in April of 21. We haven't been at the lower level since February of 2021. Now, let's look at CPI year-over-year numbers. 3.2% on headline, 3.2. That's 0.2 higher than the 3% in the rearview mirror, and that 3% in the rearview mirror was the lowest since March of 21. So that's moving in the wrong direction. And if we look at year-over-year core, arguably the most important data point here, 4.7, exactly as expected, and 0.1 less than the rearview mirror, which was 4.8, which was the lowest since OCC of 2021, and, well, at 4.2, OCC of 21, and we're still hovering there because 4.5 is the number. Now, even though 3.2 is higher, Kelly, than the 3.0 in the rearview mirror, there is an asterisk here. The fact that we are expecting a number actually even higher than that at 3.3. Because if you look at interest rates, we haven't moved that much. We were basically at 397 and 10s. Right before the number, you get that pre-number panic. We moved down to about 395. We're trading at 396. If you look at a two-year note, arguably maybe a better gauge right now. It's at 473. It was at 476 prior to the number. That was down 5 basis points. So, of course, now at 72, he had another 3. We're down 8 basis points. If you look at pre-opening equity futures, the Dow futures have improved here. They're trading well over 225 on their way to 250. So the data points, even though we had that one glitch on year-over-year headline, it certainly seems to be falling in place. And there are a lot of moving parts here as everybody tries to monitor how all this affects interest rates, the yield curve. Long-dated Treasury's been a little bit more stubborn on their yields, although they've come down. And to those, I just say the following. We have lots of deficits here. Interest rates are very important. The Treasury, of course, is going to have to wake up. Last I looked, 1.62 trillion deficit for the first 10 months of this fiscal year. Unbelievable. And interest on the debt this fiscal year, 10 months in, is already up 15.5%, 15.5%. Those numbers alone should make us definitely be paying not only close attention to interest rates, but also how some of the rating agencies, many have dismissed, well, exactly what they may be paying closest attention to. Kelly, back to you.
Rick, thank you.
Oh, I'm sorry.
Yeah,
Wait,
please.
I'm sorry.
Because it sounds like claims, not quite as positive.
Oh,
what
my
do you
gosh.
see?
248,000. 248,000. And continuing claims, 1,684,000. My apologies, viewers and listeners. Got so caught up in CPI. 240.